I'm going to go to Tom Hutchens now. He is the Executive Vice President of Production for Angel Oak Mortgage Solutions. Tom, most homeowners have a mortgage rate about 6%. Excuse me. Right now, as we've been reporting, rates are 8%. That means if I sell my house, I probably can't afford to buy the next one. Does that pretty much sum it up?
Yes, certainly, Dell. There's a supply issue, and really post-COVID is when the Fed dropped interest rates to virtually zero, so mortgage rates went to record lows. I think you just showed a statistic of 2.7% mortgage. There are a lot of Americans that are locked in on a 30-year fixed at 3% or somewhere in that range. So yes, if they sell, then they become a buyer, and mortgage rates now are hovering at 8%. So it just becomes a really difficult, the whole market is basically frozen because of what has happened with interest rates, the not only large change, but the speed at which they've changed. So many home buyers, potential home sellers are just on the sidelines right now, waiting to see what happens.
Tom, if you talk to a Gen Zer, they will tell you that homes are too expensive and mortgage rates are too high. And the bottom line, they say they don't make enough to pay the note. And also, then you tack on that student loan debt. It's pretty bad out there.
And don't forget about record levels of credit card debt right now. So yes, there's debt all around. The cost of debt has gone up tremendously and very quickly, obviously. So yeah, that's the reality of what's going on. I believe the Fed and a lot of people, real estate experts, were expecting this fast increase in interest rates would drive prices down, and it just has not happened due to the lack of supply.
Tom, is there a bubble that's about to burst?
I really don't think so, because the supply is a lot. You just heard home builders have not kept up with the demand. So I don't think there's a bubble. This is very different than 2007 and 2008, the great financial crisis. That's when everyone was getting a mortgage, and that's what drove the prices up. That is not what's happening. It's just simply a lack of supply. And even if rates normalize and come down a couple points, that doesn't necessarily guarantee us that the supply side of the equation is going to fix itself, because again, we have so many borrowers, so many homeowners, that are locked in at 3%, and they're very, very happy with that.
Tom, the situation with regards to mortgages and home prices seems to be misleading, because the National Association of Realtors says the median price for a home is $394,000. Tell that to people who live in Washington or New York or California, and they will celebrate and rush out to buy the house. The problem is that's the average. That means some places it's a lot cheaper, but most places where people get jobs these days, it's a lot more.
You're exactly right. There are certainly markets where $1 million homes would be considered starter homes. And so, yes, you plug in an 8% or higher interest rate on a $1 million mortgage. Property taxes have gone up in many states to keep up with all, inflation and everything else that's gone up. So it's becoming obviously a very common issue in many markets across the country. And not really sure what the solution is, although I do get asked if you're wanting to buy, should you sit on the sidelines now? And I would say absolutely not, because here's where I see the reality is that if you buy now and you can afford the house that you buy, and you're able to find a house that you want to buy at an 8% interest rate, interest rates are very temporary. As soon as the market and the Fed decides to start lowering rates, interest rates are going to come down. And when that happens, current prices are probably going to escalate even faster. So you want to be a owner now, even at a high interest rate. If you can afford the payment, I tell people all the time, go find that house.
Tom, I want you to address this, because I know there are people out there that are saying exactly what I'm getting ready to say. When I bought my house, the interest rate was 15%. That was back in the 80s, but the house was $150,000. So speak to those baby boomers who are talking to Gen Zers saying it's not the problem of the interest rates, it's just that you guys aren't working hard enough.
Well, I don't know that I'd say it's anybody not working hard enough. These prices are intimidating. These payments, they are intimidating. But I will say, for the young population, the number one wealth building, the number one way to build wealth in America is to be a homeowner. So if you're paying rent, yes, your payments might be a little less, but you're paying someone else's mortgage for them. You're helping them build wealth as a renter. So become a homeowner, do what you have to do, find funds where you can find funds, buy what you can afford. But it is something that, it's part of the American dream, and there's a reason for that.
Tom Hutchens with Angel Oak Mortgage Solutions. Tom, thanks for being with us.
Thank you.